Welcome to the Brew. It's Traders Workshop. Jason and Mark are joining. We can only talk about one thing, the election results and the election trade. So let's get right to it. All that and more after the bell. I usually have some music there. Not just wait.
Dude, what happened, man?
I don't know. Ruben's new at this. No, I'm kidding. What is with the headphones? Are you not having like normal stuff today?
Oh, my speaker broke.
Oh, okay. Sorry.
I thought it was because he's so locked in. I like it. He's got.
I'm so locked in. I'm ready for this show. Here you go.
All right, let's go. This is going to be the Mark show, I think. So anyway, we're gonna get to it. But anyone surprised with the results? Was that a shocker to either of you, or did you expect it? No comment. What do you think? What are your thoughts? First of all,
Go ahead, Jason.
Yeah.
No, I was saying like, prior to this, I was telling people around here that, that I thought Trump would win. I mean, there's a lot more enthusiasm for Trump than there was for Harris. But I'll tell you what's really actually depressing to me is for the first time, the vice president of the United States is younger than me. And
really?
that's kind of really, he's 40. So that really shocks me a little bit. And, I'm looking in the mirror now with the gray hair and I'm like, what's going on here, man? What's going on?
Okay. Mark, any shockers for you on this one, or was it kind of?
I think the most fascinating thing to me overall about the cycle was like the role that the prediction markets were playing in it, and tracking all of that, election forecasting. Literally less than a month before, the CFTC opened it up on American shores and the action on Poly market, and it got a lot of play as being exaggerated and swamped order books, yada yada. But they were right. They were square, correct, predicting. They were accurate on a state level. It's
interesting because I did a little TikTok video on that, believe it or not. So I looked it up a little bit, and they can fashion it back, and they went back 35 elections, what the predicting odds would have been, and they were little over 77% accurate. And the one miss they had was in 2016 because they had Hillary at negative 550 on the betting pools, which means she's the big favorite. And and that market moved as the night wore on. Obviously, it has to. But they missed that one. But most of the other ones they hit pretty well. Those predictive markets. And I watched that a lot. I think there's another one. Is it Kashi? Kashi? Yeah. So I was watching that one as well. And they not only were they right, they were pretty close to the percent right too. It wasn't that far off. Right?
Yep. They were the ones that took the case to the Supreme Court to allow for prediction markets to be a regulated futures derivative.
Yeah. Yeah, I know this isn't a political show, but why do you think the media polling was so bad?
Well, so I'll connect those two because what I was reading about, are we familiar with the whale, the French whale on Polymarket?
Yep.
Yes.
And so that's interesting in its own, we could go down the microstructure of the order book and how he may have moved the odds based on liquidity. That's fascinating. But anyway, his logic betting on the trade was that he believed in the neighbors poll. And that was his kind of foundational thesis. And the neighbors polling method I just learned is where you don't ask who you're going to vote for the way traditional polls do. You ask who you think your neighbor is going to vote for.
Interesting.
And that's a better indicator of true preference at the aggregate level than individual answers.
Because you're not admitting yourself. You're saying something about someone else. I agree with that 100%. And I just think because listen, call it what it is. Trump's a little polarizing, right? And people probably, when they decide in their mind that they're going to vote for him, they probably don't admit it to the world necessarily, or to a pollster for that matter. And they don't answer the phone, they don't respond, and they don't say anything. They just quietly do their thing. you know? So I don't know. I mean, that's what I thought. I thought it was going to be a blowout for him or a squeaker for her. So, you know, and I didn't know which one. So I was right on one side of the equation, but, you know, for the same reason, the neighbor kind of polling aspect of it, that it could be a blowout, right? And I know his people are going to be on the ground. You know, if there was cheating in the last one, I'm not saying there was, but if there were, it wasn't going to happen this time. There was no chance of that, if you know, at all. So now we're going to get a true, and think about the numbers. 81 million people voted. We're 15 million off in this election from that, or 12 million now.
Oh, the numbers last election, I didn't realize how dramatically.
I'm like, wait a minute. Where did those 15 million go? Give me a break. So that kind of made me spooky as well. But anyway, we're not supposed to be talking about this.
So you can't put on a trade for that exactly. What you said about him being a blowout, the whole time you've been talking, I've been thinking about how would I structure an options trade to be long the Trump wings and like short or long the Kamala, short butterfly. Like,
yeah. Okay, so having said all that, did you guys watch the futures the night of when the numbers were going in? Were you watching that? Okay, so they started powering upwards, right? Did you feel that the move yesterday was? I mean, is that what you expected? I mean, it's almost a 3% move, right, or a 2.5% move, I guess, which is pretty sound.
So I would say yes. I mean, I had a show on Monday where I looked through Volland and and it was all kind of there in Vanna. Like the November 15th had some decent size hedging.
Okay.
The November 15th expiration. However, after 15 November, there was like no hedging. So I kind of thought, there was a lot of static high implied volatility after the election for about 2 weeks. Most of that has melted down, and it wasn't so much. I mean, the 2 point whatever percent rally was one thing, but the fact that the VIX dropped like 4.25 points,
right?
Where the typical like spot vol correlation, that VIX should have fell half that, based on the move in an SPX. So really, I was expecting kind of a vol crush because of that 15 November expiration and a pop, but soon that VIX will come down to where it normally is, probably after today at some point because of FOMC. And when that does, that's when we'll see really what the market's made of.
Okay. Yeah, that's good stuff. I was a little surprised it was so big, but it seemed like a relief.
My perspective on it was that the magnitude could have been much bigger to the downside, right? That like I had, like most of my option structures are on longer term investments. So I had an interesting client situation where they've got a structure on in November, like the Siegel structure, the hedged equity structure, where you're short the call and you're long the put spread. And so, 3 months ago when you put something like that on, we've risen quite a bit. So, but you've got all this election vol in this structure. So the question is like, do you roll this? What do you do? Do I like pull up some protection? The structure's still worth quite a bit. So to like take that off, you're paying a lot of premium,
right?
Because of where we are in the call space. So my advice was, okay, we might go up a little bit. Maybe we go through the cap. The cap was like 200 points higher. So we didn't even go through that 6,000 level. Get a butterfly to the downside. If you want to pay for something, buy a little bit of that 4 or 5% downside. Maybe we go up, natural explosion, because whatever, Republicans are good for business, yada, yada, yay, M&A, like, great. Like, but like what we're worried about is the down 4% slippery, situation that comes because of uncertainty, because of Democrats are bad for business, that type of narrative.
Right. So when you say the downside butterfly, are you doing an SPX sort of butterfly? Is it a 50 pointer? Is it a 100 pointer? What do you
nice and wide and get something relatively cheap, right? Like the structure, we were short like the 6,000 call and long a put spread that was like 600 points out of the money. Okay. And so like, do you pay $18 for that, or do you pay like $3 or $4 to get a decently, fly down in that risk area?
Yeah.
You're protected far below, so you get sort of a middle, down 5-6% fly.
Right. Okay. And Jason, did you have anything on? I personally, I had like an old position on in Netflix, which is running up my what right now. So no bueno, but it's capped, so I know what I can lose on it. And it was just an opinion position. It wasn't anything other than that. But do you guys have anything significant on, or Jason, did you? Mark, you did. We'll talk about your DJT in a second.
I mean, I was kind of expecting the chance of this pop. So I had like a upside butterfly surrounding 59.75, and I had the hawk as Mark and I guess I made up a name for it. I used to call it a ratio fly, but Mark said, "What are you naming it?" And I'm like, "All right, well, I'll call it the hawk." It's like basically a butterfly, but with some extra calls on the far side.
Yep.
Nice little wing to it.
Yeah, so it's like a picture of an eagle swooping down or a hawk swooping down to pick up a rat or something. You see the wings way up high.
Yep.
That's kind of what it looks like. So I called it the hawk.
The hawk.
I
love it.
Yeah, so I had that on there. Yeah, and then but I still have my downside. I have a downside position for December as well. So
you do. Yeah.
Mm-hmm.
Okay.
So I kind of played both sides.
The hawk. So hold on a second.
We'll talk about that.
Hold on. Is this? Can we go to the grease board for a second? Let's go to the grease board. Is that the hawk graph right there? That sort of?
Yeah. I mean, if you put
that
arrow to the right higher, then it kind of looks like a hawk swooping down, picking up a rat, right?
So this has got to go up higher?
Yeah, like make it go higher as if it's like infinity, because it's a long call. Yeah, there you go. So now that line you just drew is the wings that are way up above the body, and then
is it like one extra wing? Did you do one extra wing, two extra wings, many extra wings?
Oh, I kind of double the amount that like if I put on two butterflies, then I will put on it'll be like a 2-4-4 ratio.
Got it. Okay, interesting. I like that. I'm a big fan of the broken wing myself, but it kind of makes it easy.
Well, this is because the fear I had was overshooting.
Yeah, I got it.
Mm-hmm.
I like it. Well, since we're here, we have the DJT swap spread, Mark. So let's talk about that while we're here.
Well, so before prediction markets existed, I think the best way to play any election sentiment in like real liquid markets was DJT. That you could obviously go into Polymarket or whatever on out on DeFi, but as far as like something you can do in your margin account, DJT is a pretty good sentiment indicator. If you watch like the chart of that over the last like 3 months, it's totally like just follows his odds. Yep. But we put this on, I want to say end of August, early September.
Mm-hmm.
DJT was trading around 23.
Okay, so DJT at 23, right? Ish.
Yeah, it was 23 and change.
Yeah, we'll call it that. Okay. So what strikes did we do? Do you remember?
It was only the serial month listed at the time, and they didn't have the 50-cent ones. So it was the 22.50, 22 on the put side.
22.50, 22 put side. So we're long this, short this?
Correct, exactly.
Yep.
And then on the call side, we are long the 25s to be short the 30s.
25.30. So we're long short. So we've got a call debit spread. We'll call it a bull spread, right? We've got a bull spread put credit spread. You get what's the net on it, do you think? Is it pretty close to zero?
Chosen because it was about even.
Okay, that makes sense.
So like with spot trading 23, because of like the vol and the skew and like the negative rate and like every pricing input being absolutely bonkers, you could sell $250 worth of downside to buy $500 of upside for even money. Okay,
good. So this obviously worked great with DJT Sky, although it's down pretty good today. It's down 18% today. Do you see that?
I see down even more. Is this right that it's trading 29?
Yeah, 29 and change. I see it down 18, almost 19%, down 6 3/4.
Yep, exactly.
I wonder what that's all about. So
maybe it's about the fact that maybe it's about the fact that DJT has about $770,000 in revenue per quarter, net losses of $327 million, and yet has a $6 billion. Yeah, it has a $6 billion market cap. I think I would that could be the reason.
I know what I'd do if I owned the shares. I'd sell them.
And I believe everyone can now. I mean,
Jesus, are you kidding me? Sell them. Isn't his net worth like $4 billion of his net worth is tied up in this stock?
Sick.
Maybe it's him getting out.
This is just a merry-go-round trade. Like, do you believe the odds are better than 2-1 that the merry-go-round happens and Trump wins and this thing mains? Like, it's not about like discounted cash flow. It's about liquidity and like, skewness.
Well, that just goes to show, fundamentals. When people do analysis on fundamentals or technicals or really on anything, all they're trying to do is predict future flow. I mean, when you're doing a fundamental analysis, you're just kind of saying that this business will attract more flows in the future. There is no actual formula for how many people buy for a certain revenue or profit margin.
Yeah, makes sense. Let me jump back to DJT, the spread here, Mark's spread here. What do we call this again? A DJT swap? It's almost like a double butter.
Yeah, it's a long equity position that you're just risking defined amounts of capital to get different amounts of upside. And this is an extreme example because, of the 2-1 nature. You go into SPY and it's actually the reverse. You have to risk more to get less in terms of cost because of standard skew.
Right. So let me just make sure that let's draw this out so people understand this a little bit. So you saying you did 2 times on this one to 1 time here?
No, I'm saying they were 1 to 1 to 1 to 1 to 1.
I got you. Okay. But this is $2.50. This is $5. So let's just draw out what the risk reward here is. So what you did this for what? Do you remember roughly what the spread is? The put spread?
They were each like $1.50 maybe.
Okay, so $1.50. That's our max profit. Would we agree with that? We sold that.
Sorry, you sold the put spread and collected $1.50, and then you bought the call spread and paid $1.50.
Okay, so the max profit's $1.50, and we're paying $1.50. That's our max loss here, but our max profit is $3.50.
Sorry, you collected $1.50 on a 50-cent spread?
On a $2.50 spread.
Oh, I wrote that wrong. My bad.
Oh, okay.
This is what you said, 22 and 24.50?
22.50, 20. Sorry, I might have said 22.
Yeah, I think that's okay. That's where we're both confused, Jason. Okay.
I was about to say I'll mortgage my house.
Oh yeah, they teach that.
All right, so this one he paid $1.50 for it. Well, so our max profit is $3.50, right, on this call spread, and our max profit is $1.50 here. So for a total of $5 max profit. Yeah.
Correct. Yeah.
Okay. Perfect. So nice and easy. Did it ever see anywhere near 150 yesterday? I'm sorry, $5?
Yeah, we got out of it for 5 yesterday.
Oh, perfect. Okay, good. Oh, so you took max profit. That's amazing.
Yeah, because the vol collapsed, right? Like I believe. I mean, now we're at 190. I think it was over 450 yesterday.
Right.
So like that's an interesting thing too, is how this marks all along. Even when spot runs up through your strikes, like it doesn't get worth that much because the ball is so high still. So like your marks don't change that much with a decent amount of expiration as stock fluctuates down to 18. I think got down to 13. Like the marks never got bad early in the trade. It's really the second half that like all that decays and you have, a realized level.
I guess we should find out what our max loss is while we're doing this so people get it. What do you think?
Mm-hmm.
All right, so let's look at the put spread. We sold it for $1.50. It's a $2.50 spread. Yeah, so we can lose $1 on the put spread.
Mm-hmm.
Okay, plus we paid $1.50 for that call spread, so we can lose that $1.50. That's the max for a total of $2.50. Yeah. So technically, risking $2.50 to make $5. Yeah.
Yep.
And we love that. This, what surprises me the most, and Jason, maybe you feel the same way. That's a pretty great credit for that $2 and a $2.50 spread. I like
it's because the negative rate was so big.
Is that why?
Right.
Like that's a big draw, and the ball obviously helps, but like the negative rate, like really, forward value of this in early September was spot at 23 was like below 20, I think.
Yeah. Okay. Interesting. All right. Are you going to keep trading DJT? We can go back to, we don't need to look at my screen anymore. So I can always jump back to it. Are you going to keep trading DJT? Is it a good trade? Is it liquid enough? That's always my fear being a retail guy now is liquidity.
It was not. Oh, you and me both. That was my fear as a market maker too. It's gotten a lot more liquid. Like
Okay.
this was going out, 3 months in past of the election in early September. Like you had fewer strike choices, but they've got 50-cent intervals like all the front weeks now. Like, the open interest isn't bananas level, but like a couple hundred on every line, like 20-cent wide spreads at worst in the deeps, and you can I got executed, like this was a $1.50 wide spread when I executed it, and I got midpoint plus a nickel.
Oh, that's good.
Oh yeah, really came in.
That's
someone
really
DQ got, they got like 5 EQ, 15 EQ on that.
Yeah. So my before we leave, my little election party trade was SPX Iron Condor, but a long one. Weird, right? So, like I said, don't know which way it's going. Doesn't matter. And what I did was I spaced it out 20 points to the downside, 20 points to the upside, meaning my long was 20 points. My longs, my put and call, were 20 points either direction of at the money, right? And then I made it a 10-point wide iron condor, so that my short strikes were 10 points from my longs. Make sense?
How much did you pay for that? That must have been like $6-7.
It wasn't that much because I was so far out. It was, it was pretty far.
Wait,
right?
I think you said 20 points from.
Yeah, so it was like $7. It can go to 20, right?
Okay, yeah, $7 on a 10-point vertical.
Yeah.
Yeah. Okay.
It wasn't bad, I didn't think. So, look I do these all the time now in 0 DTE because Jason's going to explain this in a second. The SPX moves so peculiarly in the last 15 minutes of the day. It's just crazy, right? It always pushes a strike. And I know the answer, right? It's our Vana friend and our charm guy over there. But it does it like all the time. So you can do these little iron condors at the money with 15 minutes to go for like 30, 40 cents that can blow up to $5. And if you're beyond
level in,
if you're beyond pattern day trading, you can close these things, which you need to be able to do, unless you got to do boxes, and we'll describe that another time because we don't have time. These things go from 30 cents to $1.50 like that.
Yeah, exactly.
It's crazy. It's crazy. So I said to myself, you know what? I think there's going to be a big move either way. I'm going to take the $7 chance, and I'm not going to lose $7, right? It's hard to lose the $7 no matter what. Even if it sits unchanged, I'll probably lose a couple bucks to get out. So that was a good one. But again, I didn't have a direction. I just said I'll take both directions.
We got to build a bot that does this.
Well, you're the bot guy now.
I like that though. A little gamma scalp.
Yeah.
A little gammatron.
I just get out. I just get out. That's it. And here's the cool thing. For the people under 25,000 in their account, what you can do is, let's say you get a push to the upside like we did, right? So now the corresponding put spread to box that wing off, you compute what that is based on the whole price of your $20 spread. So if you can get the other $20 box, right, less than $7 plus 13 to make 20. So somewhere south of that, you can probably get it for when it ran. It was like probably pennies. You lock that in. You keep your put spread open in case something crazy happens and they miscounted and it just flies down. Now you get a free, put spread to the downside, and you boxed up your good side. Does that make sense? It's a great way to play it.
Yet I'll argue that the pattern day trading rule is absolutely ridiculous. Of course.
Well, we're going to have a whole show on that. And by the way, we do have to go. But by the way, the government, SEC, FINRA, I don't know which one, they put out a comment period on PDT. And I wish I could comment on it, but I'm sure it's expensive to get lawyers involved to make your comment. But it's the dumbest.
Comment letters all the time. You want to write one?
Yeah, it's the dumbest thing I've ever heard of in my life. It's so stupid. It mystifies me. But we'll talk about that and why?
Is that your comment?
No, I'm going to say it's stupid. I always raise my hand. I go, that's the stupidest thing I've ever heard. Who wrote that one?
I could see Lex writing the comment. This is so stupid that I am mystified by your idiocy.
Yeah, that's right.
And that's going to be the first one they're going to read. They're going to say,
they're protecting the little guy. Yeah, they're protecting the little guy who doesn't have 25,000, and he or she can't close a trade and make money. God forbid that he or she can make profits on a regular basis. My goodness.
The first thing they're going to read, whoever Trump appoints, first thing he's going to read is like, okay, our first comment. Lex Luthor says,
make sure
this is so stupid. It mystifies me. You guys are idiots.
That's right. The new chairman of PDT rule.
Yeah. Elon Musk is sitting there.
That's right. All right, boys. Good job. Looking like we did pretty well on the day after trade. So that was good. Congrats. I will see you guys not next. I might be on the boat next weekend or next Thursday. So we might maybe do the one from the boat again.
Look at this. Lex is emigrating because of the Trump victory.
That's right.
He's joining Richard Gere.
Too funny. Touche. All right, boys. You guys have a great weekend. And Mark, happy trading. See you next time, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.